Apple is looking a bit bullish, and the US dollar Japanese yen is stuck in a small range. Hang out right there and we'll discuss it. Hi, this is Tim from TradingStrategyGuides.com. Today we'll be looking at an ascending triangle on Apple Inc. and a small trading range on the US dollar Japanese yen forex pair. We're going to take a look at those, but first I made a little boo-boo in Friday's video, so I want to get that corrected, and then we'll check out the active trades later on. Today's trading maxim. Happy Monday. We're another week closer to the new year. Let's take a look at our active trades. Friday I mentioned that my Tesla trade was closed with 101.47 per contract, and that was totally wrong. That's where I had my stop, but I was only looking at my chart numbers and I didn't check my account until later. And imagine my disappointment when I realized that Tesla actually gapped down on Thursday and opened at 574.37, effectively closing my trade at that point for a profit of only 87.73 per contract. Don't you just hate it when that happens? I'm done with Tesla for now. Thursday, the Canadian dollar yen triggered a buy right here. I bought it at 81.81-ish. My stop is 80.96, and my first target 82.38. Then Friday, it pulled way down here and then pushed back up near the range right there. I think if you split hairs, it probably closed slightly below the line, but I stayed in this since it made such a great wick down here and then pulled back. So we'll see what it does this week. The Great British Pound Aussie dollar gave us this sell trigger right down here. This is like a huge move right here, and I kind of anticipated it because it kept trying to break through the line up in that area. So I sold it at 176.43. My stop was way up here at 178.96. My first target was 174.78, which it handily hit on Friday right there. So I moved my stop up to break even, took half off profit. Now I'm waiting for the PSAR to get down here to start trailing stops on this. Back in November, I showed you this descending triangle on the euro pound. Well, it started to blow out right here in early December, and while the volume popped just a little bit, the volume has continued on down since then. So I redrew this as a trading range, at the top of the range at 91.60, the bottom of the range at 88.60, which is where the bottom of our triangle was. So here's the new plan. We're going to buy a daily candle close above the range or above 91.60. Then we'll still watch for a candle close below 88.60 for a sell signal. All the rest of the trade setup is the same. And that's all the active trades for today. Let's take a look at today's trade picks. Today we're looking at an ascending triangle on Apple Inc. An ascending triangle consists of a strong resistance level, like this one right here at 126, with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern, and I will only take a buy signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. Here's our trade plan. We're going to buy a daily candle close above the triangle or above 126. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the percentage by taking this number and dividing it by this average. You should get 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. So when this breaks, about 15 to 30 minutes before closing, set up your buy order, Look down here at the ATR, multiply that by 1.5, measure that distance behind your entry for your stop loss, measure 1 ATR above your entry for your first target. If after entering the trade, get a close back inside the triangle, we'll take our loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I'll only risk about 2% of my account on each trade. And that's today's setup on Apple Inc. And our second setup is this small trading range on the US dollar Japanese yen. Just to be sure you're with us on this, a trading range is a consolidation with a strong support level like this one at 103.65 and a strong resistance level like this at 104.75. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. Again, we want to look for a decline in volume and volatility like we have right down here. And here's the trade plan. We're going to buy a daily candle close above the range or above 104.75, or we're going to sell a daily candle close below the range or below 103.65. I won't bore you with the whole spiel again. The management details are always the same. If there is at least average volume, enter a full-size position. If there's only 75% volume, enter half-size position, otherwise stand aside. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. If you get a candle close back in the range after you enter the position, close the position and take the loss. Take half off for profit when it hits the first target and move the stop to break even on the remainder. Again, a 2% risk on this trade. And that's today's setup on the US dollar Japanese yen forex currency pair. Okay guys, that's how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and trade that way. And to help me get my head screwed on straight, I use the trading maxims. A maxim is a general truth, a fundamental principle, a rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 25, trading is a marathon, not a sprint. If you've been on my channel for more than a minute, you probably already know that I'm a CrossFit athlete, and my son is a CrossFit coach. He tries to coach his old man, but his old man just doesn't listen real well. Some of our workouts are designed to be sprints that you finish in 3 or 4 or 5 minutes or so, but many of them are much longer, as much as 30 minutes or even some 60 minutes long. My son is always telling me to slow down and pace myself on the longer workouts. I just, like I said, I don't listen real well. I just get in there and I go full tilt until I just can't move, which is, you know, in the first 45 seconds or so. Maybe one day I'll learn. Anyway, if you're here because you think trading is a get-rich-quick scheme, you're about to be sadly disappointed. Trading is about picking high probability setups, managing risk, and taking the occasional windfall. But make no mistake, you're not likely to turn a $500 account into $1 million anytime soon. Hey, I'm just trying to manage your expectations here. You'll never succeed in this if you give up too early, so you can't get discouraged if you don't get it right away. It may take some time. Just remember to pace yourself. This is not a sprint, it's a marathon. Remember our Apple Inc. trade plan for today. We're going to buy a daily candle close above the triangle or above 126. And our US dollar Japanese yen trade plan, we're going to buy a daily candle close above the range or above 104.75. Or we'll sell a candle close below the range or below 103.65. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better, and your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And look in the description box below for a link to the trade management video. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. And come back next Wednesday for the next installment of the Trading Education Series, when we'll be talking about different trade setups. And of course, be here Friday for my strategy of the week and next Monday for my next trade pick. Our videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.